Let me now start recording. Apologies. Welcome back, guys, to another lesson where we're going to be focusing on chapter 14 class example. So we've mentioned that it's 15% VAT, perpetual, first in, first out. Please, let's read together. On the 1st of February, crate 101 contained 80,000 fruit juice bottles, which were bought at 40 Rand per bottle. Please go with me. Let's write together. If it's 80,000 total divided by 40 Rand per bottle, how much is a bottle? So we're going to say 80,000, right? Divided by 40 Rand, right? Per bottle. How much do we get? I'm getting 2,000. Are we getting the same figure? Are we just getting the same figure so that we know how many bottles we have? Are we getting the same figure? We have 2,000 bottles at 40 Rand each. So this is what we call, when does our year start? If our years, they don't tell us. They should tell us. Our year ends 28 Feb 2025. But at the beginning, 1 Feb. Okay, I was going to say that's our opening balance. It's not. When does our year end? 28 Feb 2020. So when does the year begin? Guys, if our year ends 28 Feb 2025, when does it begin? When does it begin? Guys, 1 March. So year begins 1 March 2024, right? Again, let's write that down. 1 March, year begins. Inventories 42,000. Who said 42,000? What's happening? Why are people saying 42,000? What are we talking about? Are we still talking about the same thing, guys? Sorry, sir. Okay. I forgive you. You were jumping ahead. Miss Patel, you see this thing of jumping? Yo, don't jump, guys. In Zulu, Miss Patel, we say ungakakameli, ne? Ungakakameli. That means don't jump ahead. Yo, Patel, ungakakameli. No. Bad girl. Ungakakameli. Don't jump ahead. We'll cross that bridge when we get there. I forgive you. I forgive you. Ungakakameli. Don't run. We are together. Sharp. Now, let's read required. We are recognizing journal entries. Beautiful. Cost of sale. Beautiful. Let's read now. Miss Patel, this is your time to shine. On the 2nd of Feb 2025, 1,000 bottles were purchased from a supplier at a purchase price of 42 Rand per bottle, excluding VAT. Right? Okay, let's do this. Storage costs amount to 1,400 were incurred as the stock could not be picked up. This stock was stored in crate 002. Okay. So, do you guys want me to share my screen, or must I write down on a piece of paper, and then that piece of paper I'm writing down on, I must share the picture in the group? Because I want also people to write. What do you guys prefer? I know that's a dumb question. Everyone's going to say I must share my screen. Ne? I shouldn't have asked that. Ne? Ish, guys, don't judge me. Yeah, I'm sorry. Never mind. Let me just type. Sorry. Don't answer me, guys. It's fine. I wasn't thinking then. So it's okay. Yeah, it's okay. You see, now I'm starting to get the tendencies of Miss Patel now. We're just doing things now. I'm sorry. But I don't like typing, guys, because I also want to write down. So, must I just type for you guys to see, Velene? This is not about me ne, and what I like. It's about you guys, ne? Yeah, never mind, ish. Guys, because I like my handwriting, you see, so I wanted to see how well I can still write, but then I realized it's bigger than me, this one. So, the first thing we need to do, is design, right? Or insert the table rather. So when we insert the table, okay. Okay, no, let me first do this. Like this, right? Okay, so we're gonna say account title and narration, debit and credit. So this one is very easy. Let me just move my things. We bought inventory, right? So we're gonna debit inventory, SFP, credit VAT input, SFP, and then what are we gonna debit? What are we gonna credit? Apologies. We are then going to credit bank because it was bought on cash, right? Bank, SFP. How much is our bank being credited by? This is very much easy. Actually, it's not so easy because we're going to need to separate these. Let me see something. Let's have it. Okay. What do you guys prefer? Do you prefer that we recognize the inventory separately with the and recognize the storage cost separately, or do you guys feel smart and then we combine the two? Which do you prefer? Must we separate them or must we combine them? Oh, bankers, people are saying separately. You don't want to make it one journal, you want to make it different journals. What do you guys prefer? Can everyone just type? Combine, separate. But in class is what combined. People did this in class already. How? So when I was giving you guys this as homework, you guys knew that it was done, most. So it means you guys have the answers. So it means I'm the fool, Moose. What's going on now? Hey, man. What's going on? So help me then. How? Let's engage. Amos, we are wasting time, Moose. We are doing things you guys have already done. Hey, but we don't say we waste time. In class, people didn't understand. Ne? Yeah. In class, people didn't understand. So now that you guys have done it, please share with me the solutions. Let's go. What do we then do, guys? Here we are engaging. What do we then do, guys? Guys, what do we then do? Guys, hello. What do we then do? Can you guys unmute your mics? Talk to me, guys. This work is done. Guys, my job is to make things easier for you guys where you guys are confused, but I need to know where we're starting. I can't talk where I am. Where are you? Hey. With who?
In this weather.
In this weather on a Sunday. But let's be serious. Let's be serious. Study, but
My sister, December is around the corner, so son.
Okay, guys, type in the chat box.
Right. Yes, Remo.
Yes. Okay, there's someone in the chat box. You're too late. It's fine, Matume. Ibabe. Life, ne? Life comes at you hard. Pause. For inventories, is 1,000 units that we purchased at 42 excluding VAT. Good. So our inventory here is going to be 1,000 times 42 rands. This gives us 42,000. So we're gonna debit what? 42,000. Nice. We are then told that our storage cost excluding VAT is 1,400. So this is then gonna be 1,400. Our VAT input should be very easy for us to calculate. It's gonna be 42,000 times 15 over 100 plus 1,400 times 15 over 100. How much do you get for VAT input, guys? You guys did this in class, no? 42,000 VAT input is 6,300. Oh, you did it separately. So it's 6,510. Okay, away. 6,510. And then, how much is then the total of bank then? How much is the total, guys? Of bank? 48,510. So 48,510. Fine. And that is how we generalize transaction number 1. Is everyone okay with the work we have just covered now? Or that transaction, rather? Give me thumbs ups. Give me thumbs ups. Okay, wait, guys. There are noises I'm hearing. Wait, I'm coming back. Give me a moment. Give me a moment, guys. My roommates they're misbehaving. Give me a moment. I'm a big dog. Apologies, guys. Yes, where were we? Apologies. So, is everyone okay with journal number 1? Transaction number 1, I mean? Guys? Okay. Number 2, 2,000 bottles of fruit juice were purchased on credit from supplier Liqui at 47 Rand each, excluding VAT, on the 9th. FJ buys the majority of the stock from a majority of its stock from Liqui and was given a trade discount. Each bottle was reduced to a price of then 45 Rand, excluding VAT. This was crate number 3. So what do we then do here, guys, with crate number 3? We bought stock on credit.
Can I answer?
Can I answer? Can I answer? Can I please answer? Please. Where I come from, we ask politely.
Please. The
answer is no. I'm teaching you a life lesson. In life, even when you ask nicely, they still say no. So even if you ask, it doesn't change anything. No. Next. I'm teaching you real life. Yeah. No. Yeah. It's fine. Another person would like to try, guys? That's how life is in the real world, guys. You can ask nicely. Doesn't matter. No. It's bad, guys. It's bad. Okay, but this is relatively easy, guys. You guys can be quiet with this transaction. It's easy, eh? What do we do, guys? So the balance for the, sir, is the balance for the bank account correct, sir? The above journal, 49,000, 49,910. Sorry. Me, I was told that figure, guys. 49,910. Who gave me that 48,001 something? I swear it was Matome. I swear. I saw Matome. No, it wasn't him. Oh, it wasn't him, Shem. It wasn't him, eh? It was Sisanda. Oh, Bandla, Sisanda. Oh, Ngosia. It's wrong, guys. It's 49,910. Yes. Sorry, Matome. Ish. Wait. What do we do for the next transaction, guys? Guys, it's the study. Very confusing. Guys, there are people knocking on my door at their big age. Why? I don't know. At their big age, guys, let me do this one more time. I'm hitting someone, guys. I don't fight, but today they're testing me. Give me one more minute. I'm done now. Because no, it's bigger than us, this one. Sorry, guys. So we are back, ne? So they're saying that record at discounted rate. Right? Inventory is 90,000, VAT 13,500, payable 500. Okay. So let me just confirm with you guys now, ne? We're gonna use the discounted rate, which is the 45 rand one. So if it's 45 rand, it's gonna be what? 2,000 bottles, right? It's gonna be 2,000 bottles times 45 rand, which is the amount excluding discount. How much do we then get? 90,000. So if we have 90,000 here, apologies, 90,000, our VAT input is then gonna be what? 90,000 times 15 over 100, which then gives us a figure of how much? Times 15 over 100. We then get a figure of 13,500, right, guys? And then we should add then the two figures to get our payable, which is how much? 103,500. But someone give me that answer. Who was that? I think that was Miss Patel. How? Miss Patel namanje uyakakamela. How? That's very good. Very good, very good. I am happy. Right. Record at discounted rate. Yes, thank you so much, Umpumit. Is everyone okay with the work we just did now? Are you guys all following? Okay. We are then now continuing. On the 12th of February 2025, 3,100 bottles were sold. Okay, this one is bigger than us. Let's think now. To receivable Just Juice, right? And were delivered on the same day. Invoice reflects an amount of 149,500 including VAT and is payable on or before the 12th of the. So we sold something. So when we sell something using the perpetual, we are going to do what? Debit, I think here's receivable, right? Receivable Just Juice. Credit VAT output SFP. And then credit what? Revenue PL. Then we also then gonna debit what? Cost of sales. And then inventories. Cost of sales is PL. So our revenue we know is how much? Our revenue is going to be no. The receivable owes us amount of 149,500, right? So it's gonna be 149,500. Therefore, our VAT output is gonna be 15 over 115 times 149,500. How much do we then get here? 149,500 times 15 over 115. We get 19,500. Meaning that our revenue is how much? 149,500 minus 19,500, which gives us a figure of 130,000. Are we all following with what I just did here? Guys, are we all following? Now, please. What's going on? This one is bigger than us. Can we now please pay close attention to the cost of sales? Because we are using the first in, first out method, meaning that we are selling the oldest stock first. Are you guys following? So, the students that were not in the contact lesson yesterday, what is first in, first out? I am going to give an example, but that example, or this example rather, is not an indication of how I am as a businessman, but it's going to make things very simple for you guys. Are you guys following? Are you guys following? Give me a thumbs up. Yes. The example I am going to make with first in, first out is scones. If I am baking scones, first in, first out basically means that I'm going to sell the oldest scones first. Those dry scones that need tea, I'm selling those ones first to customers before I start selling the fresh ones. You understand? Yeah. It's very wrong. It's very wrong. But that's what they do. Who's they? People in business. When are you guys think the food you guys eat at those groceries are fresh? They're using first in, first out method on you and your stomach. It's bad, Shem. No, it's bad, guys. Are you guys following? Ne? Yes. Give me a thumbs up. So you mustn't be surprised when you say, but that food doesn't look fresh. It's because it's first in, first out. Alright, guys. It's business. Do you guys know that meme? It's business. My boy. Why you like my it's business, Papa? It's business. Fine. So now, which is the oldest stock we have first in this context? Let's go back. How many units? Let's look at the units that were sold. We sold 3,100. Ne? If we sold 3,100, we had 2,000 units, remember, from the 1st of Feb. Ne? 2,000 units. Then we bought 1,000 units as well. Then we also bought another 2,000 units. How many were sold? 3,100. So if 3,100 units were sold, we sold everything of the first batch of the 2,000 and the second batch of the 1,000. And then we're also going to sell 100 of the latest from the 2,000. So our cost of sales is then going to be what? Our cost of sales using the first in, first out is going to be the 2,000 units at the beginning that were worth 40 Rand, right? Yeah, it's the 2,000, right? Yes. And then also the 1,000. How much is the 1,000 now units worth? 42, ne? Is it 42? Yes. So also sold these ones 42 Rand. And then 42. Then we're also gonna sell 100 units from the latest batch with cost 45 Rand. How much do we get? Here we should get 4,500. Here we should get 42,000. And then here we should get, how much is this? 8. So it's gonna be, is it 80,000? It's 80,000. How much is then the total, guys? 4.5 plus 80 plus 42. Our cost of sales in this context is 126,500. Are you guys following me? Guys? Are you guys following me? Okay. Then we move on to the next transaction. So from how many units of stock do we then have left, guys? We now have 1,900 units left, ne? Because we sold the first 3,100 and we have 1,900 units left from this batch of the 2,000. Sharp. 400 bottles that were previously bought from supplier Liqui were returned to the supplier as the logo Liqui was spelled incorrectly on the packaging. On the 15th, a credit note of the stock was returned. Supplier Liqui. So returns in, right? Is it returns in or returns out? Which one is this one? Guys? We are returning to supplier. So it returns out. So what do we do? What are we going to debit? What are we going to credit? Guys? What are we debiting? What are we crediting? You guys did this in class. So I was told. People submitted homeworks. Debit payable Liqui. Alright. So we come here. Why? Because we owe him less. Right? Because a payable is a liabilities and liabilities decrease on the credit side. So when we bought the thing, we were charged VAT input. So VAT input was what? VAT input was debited. Now it's going to be what? Credited, right? Because we're doing the opposite. And then credit inventory, right? Is everyone following? And then how much is the figure? They don't tell us. They tell us it's 400. So we're going to say 400 times the cost, which is 45,000, right? I mean 45 rand. 400 times 45 rand, that's 18,000. So our inventories is 18,000. Then the VAT input is going to be 18,000 times 15 over 100. And that gives us a figure of how much? 2,700, right? 2,700, meaning that our payable Liqui here is gonna be 20,700. Are we all on the same page, ladies and gentlemen? Guys, for those that are understanding, can you please unmute your mics and say yo, 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 yo? No,
Yo.
that's all you know. Yo. That's all you know. You come to insurance payout quiet, but no, guys, stop it, bad boys and girls, stop it. Are we done, guys? Are we all on the same page? Guys, are we all on the same page? Yes. We are done, right? Here, this one is easy. They're telling us about the insurance payout policy. Let's read it. FJ, trade inventories are insured at full 74,750. On the 25th, many shopping malls and other shops in Floss Forest were looted. FJ was also broken into and the stock in the crates was stolen. It was agreed with the insurer in respect of the following amounts: that the estimated cost of the trade inventories on hand immediately before the thing was 67,500. Estimated cost of the portion of inventories on hand before the looting that were not stolen and were left remaining in the crates are 7,470. The claim was approved by the insurer. The average clause was applied, and the insurance compensation that will be paid on the 5th will be 66,478 rands. What do? We need to write down losses of inventory and something must bambisa. What do we then do, guys? What do we do? What do we credit? What do we debit? Guys, I am patiently waiting. Credit inventories. Aisha. Matome. Was it not you, Matome? Iyo. You see now, Matome. I told you are focusing on the wrong things. The question was, what do we generalize? Debit loss due to theft. Calculations. Why is no one mentioning calculations? What's going on? What do we debit? What do we credit? So we're going to debit loss due to theft. Okay. Loss due to theft. Right. PL. What are we gonna credit? Trade inventories. Calculations. How do we get to the figures? Loss due to theft is 67,500 minus that. Okay. So it's going to be 67,500 minus 7,040. Is it not? It's 7,040, ne? No. 7,470. 470. Which gives us 63,000. Does it? 63,000. 60,030. Sorry. 60,030. Okay. Okay. And then what else do we need to do? We need to close this off. Are we not gonna close this off? Oh yeah. People are not closing down anything. You see now. What's going on? Are we not going to close this off to cost of sales, guys? They didn't in class. Okay. Me in the test, I'm closing it off. But in class, if they didn't. So what are you guys gonna do in the test, guys? Are you guys gonna close it off or you're not gonna close it off? I'm just asking hypothetically. Oh, so Miss Patel, if I'm hearing you correctly, you are going to close it off. So you are going to disregard what the lectures are saying. What's going on? Why didn't they close it off in class, but now you guys in the test, you'll close it off? Better safe than sorry. Away. So if we were to close this amount off, what would it be, guys? It would be debit cost of sales, PL, and then credit trade inventories, SFP. How much? 60,030. 60,030. What then do we have to do next? They're telling us about insurance clear out proceeds. What's going on? It will be paid on the 5th. What do we do? What do we do? Hey, this one already even wrote it nicely. How, Banja? I mean, I knew it. Yeah. Sega Khalid. I was too excited. I knew Sisanda just typed 280 there. Yeah. Debit receivable insurance 66,478. Credit. Sisanda uthini la? Debit insurance compensation. Receivable, right? Yes. Insurance compensation. Yes. Credit. Yeah. Sisanda, are you sure this is correct? Guys, what do we do here? Sisanda, what are you doing? How, Banka? Guys, can someone help Sisanda? What's going on? What are we crediting? What are we debiting? I mean debit, and then she laughs. Guys, what's funny? Oh, Banka, Sisanda. Ah, Shem, I'm joking, Sisanda. Before you cry, I'm joking. Debit, our receivable insurance, and then credit, right? Insurance compensation and VAT, because those are the insurance compensation is income, right? So let me just copy this and then I'll edit it correctly. Right? Is it even going to do this one? Which one is Google's? It's not even the format I want. Debit, it's gonna be debit what? Debit receivable. Now it's in ish. It's using a different thingy now, guys. Yeah, I think it should be back now. Receivable insurance. Insurance. What are you gonna credit? You're gonna credit insurance what? Insurance compensation, right? Credit SFP. And then how much is it gonna be, guys? 66,478, right? And then what are we then gonna credit? 58,507, right? No, 57,000. Sorry. And then VAT is 8,671. 8,671. And then how did we get to these figures? Let's see. They tell us that this is the amount that which we're going to receive. So to get 57,000, we're gonna say 66,478 times 100. Times what are we required? 100 over 150. You get that amount, and then our VAT is gonna be 15 over 115 times 66,478. Are we all following, guys? Okay. And then there's something missing, but I assume in class they also didn't do it with you guys. What are they gonna do here? Do we not close off our insurance compensation to VAT to cost of sales, or did I not see correctly in the slides, guys? Did I see correctly in the slides, or I'm just seeing things I saw incorrectly? Oh, sorry, guys. Let me just see something to confirm. I hope for your sake, Miss Pat. Oh, it was lost due to NRV. Oh, banga, Ash. Never mind, guys. It's fine. I saw incorrectly. Yes, you are right. But, so, is everyone on the same page, guys? Are we all fine? Please just give me thumbs ups. So now, last transaction on the 28th of Feb. The net realizable value of 2-liter bottles was determined to be 40 Rand each. How do we then go about doing this, guys? Last transaction. Last transaction, guys. Last push, guys. Talk to me. What's happening? Sisanda, Matome, Ndobuhle, Gugu. Yes, Matome, talk to me.
The last transaction, which is transaction number 9, right?
Yes.
So, lapha baitse on 28 Feb, the net realizable value of a tweeter, which is bottle was determined to be 40 rand each. And then at the beginning of the year, we started guy. Yeah, the amount we started with is at the beginning of the year. We have to find the difference between the amount at the beginning of the year, the stock that we had before, and the one we have now, which is 40 rand, and then the difference that we will credit card are going to write it off to cost of sales and NRV, write down due to net realizable rate.
I'm hearing that. I'm not hearing figures. What's going on?
Yeah, that's the figures. Aisha, thank you very much.
You didn't know. You are just saved by Aisha here. Ah. Loss due to NRVPL. I'll explain just now. Loss due to NRV 800 and there's no calculations anymore, guys. What's going on? Where are the calculations? Can I have calculations, guys? How did we get to the 830? How? People are providing us with numbers, no calculations. Matome is Aisha, Aisha. Wait, there's the different calculations here. Okay, it's the same thing. 166 units we have, that's times 40, right? 7,470. Oh, and guys, let's relax. Let's relax. What's going on? Can people unmute their mics and speak? What's going on? Gugu, Boitumelo, Aisha, what's going on? Yes, please respond.
Okay, so the 166 bottles we had at the end of the month, it was valued at 45 Rand. But now we've realized it's valued at 40 Rand.
Yes, so we are then going to say what? We are then going to say 166 times 45, right? Minus 166 times 40, right? How much is then the difference? 830. Guys, is it 830? Guys. Oh yeah, it's 830. And that is how we get to our calculation. Is everyone following, guys? Can you please give me a thumbs up if you're struggling with this? I mean, thumbs down. Thumbs down if you're struggling and you need me to explain. What's wrong, Sisanda? Oh, I didn't see that name correct. What's wrong? Where are you not understanding so that I can speak to you directly? Tebelelo and Sisanda, what's wrong? So they tell us that our stock is now worth 40 rand, right? However, the 166 units we have left were 45 rand. The difference is then lost due to NRV. So we're going to say 166 units that we have times 45,000, which is the value of the stock, minus 166,000 times 40 rand, which is now the value of the current stock due to NRV. You should then get a figure of 830. No? Are you now understanding Tebelelo and Sisanda? Unless if there's a hand. Oh, I get it. Hi, Mpo. Mpo, hi. How are you, Mpo? Mpo, was that a mistake? Mpo. Mpo, we are waiting for you. Thank you for featuring me. And now we are left with B. Must we then, do you guys want us to do this transaction, guys, or you guys already know how to do it if we're to present it in the line item? Must we do it, or are you guys understanding what we just did? Must we do B, or you guys are fine? If you want us to do B, give me thumbs up. If you don't want us to do B, give me thumbs down. Thumbs up to do it. Thumbs down not to do it. Thumbs up. Yay. So, if we're doing the statement of cost of sale, the line item cost of sales, how I would go about it is that I'd say statement of profit or loss for FJ for period ending 28 Feb 2025, and then I was gonna have revenue minus cost of sales. So the cost of sales here we have is what? How do we and then gross profit? But there's no need for the gross profit part because they just want us to have this. So our revenue here would be like what? It would be XX because we don't have the figures. And then our gross profit here would also be XX because we don't have the figure. What is our cost of sales, guys? Our cost of sales is gonna come here. It's gonna be 126,000. 126,000, right? 500 plus 60,030, right? So 126,500 plus 60,030, right? What else are we missing? Plus 830. What else are we missing? I think that's it, no? Right, guys? That's it. Is there anything I'm missing? 126,000 minus 60,030 minus 57. No. 57,800. Where's the 57,000 coming from? Let's see. The 57,000. Where's the 57,000 coming from, guys? Where's the 57,000 coming from? Just to confirm the insurance. Oh, yes. But thing is, this is then a problem. Wait, why didn't we then generalize it here then to close it off, guys? Because our cost of sales was gonna be. Wait, there's something. If insurance is paid out, our cost of sales are decreasing. Yes, minus. Yes, 57,000. It's this. Because this reduces our cost of sales. Yes. So it's 57,807. So 57,807, which then gives us a figure of how much? 129,553. So it's going to be 129,553. Are you now then following, guys, how we got to this figure? When they say that they want the line item cost of sales, this is what they were looking for. Are we all on the same page, guys? Guys, are we all on the same page? And then lastly, when we're doing for inventory, it's gonna be the statement of financial position, right? Okay, just ignore that. Statement of financial position, inventories. No, it's gonna be assets, then current assets, then inventories. Then how much are you then gonna say for your inventories? For our inventories, we had an opening balance of inventories. Do you guys remember? Our opening balance was 80,000, right? It should be 80,000, the one that we had on the 1st of Feb. Plus 42,000 here, plus 90,000. So plus 42 plus 90, right? Plus 42,000 plus 90,000. Plus 42,000 plus 90,000 minus 126,000 because we sold inventory, minus 18,000, so 126,000 minus 18,000, minus 60,030, right? Actually no, if it's closed off to our cost of sales, this is wrong. It's gonna be cost. It shouldn't be cost of sales. Here it should be loss due to theft. So yeah, minus 60,030 minus 830. So 60,030 minus 830. Yeah, I think that should be correct, and that should give us a final figure. Why didn't we close off the proceeds? No, Aisha, what do you mean inventories? 7,470. Do we still get the same figure? I'm trying to see something. No, it's minus. Why we plus? It's plus, minus. Are we should getting the same PC, guys? Wait, are we getting the same amount? Because my understanding of this is that we need to take into account all of the inventories we had at the beginning, plus the ones we purchased mid-year, and the ones we sold and whatnot. What's happening here? I know the inventory we have due to net realizable value is this, but I want to see something though, because if we don't get to the same figure, then I want to see something. 80,000 plus 42 plus 90 minus 126 minus 18 minus 60 030 minus 830. Yeah, oh, I'm so smart. Oh, thank God we get the same answer. Yes. Oh, I thought you guys were paying a scam. Oh, thank God. Ni hao ma. Yo, I was so scared, guys. Oh, ni hao ma. Tai shi. I built this shit brick by brick. Yes, sir. I'm so. You know, guys, when you're working on something and then you need the answer to be the same, otherwise people start looking at you weirdly. No, guys, I still know my work. Can you see it's the same figure, guys? I just took the long dry, eh? Yeah. I know there was someone. I know. I think it's Nobushi. Nobushi was thinking here. No, someone is not doing their work. No, guys, it's the same figure, guys. Can you see? I just took the long route, guys. Yeah. Are we all on the same page, ladies and gentlemen? Wow, what a way to end this wonderful lesson. And we are on time, guys. Can you see that it's 2 minutes past 10? We are improving. We are cruising. Can you see we are serious this semester? Wow. But before we call it quits, ladies and gentlemen, is there anyone that would like to ask a question? Or there is a question. Why didn't we close off the proceeds? to account to cost of sales. In the test, that's what you are supposed to do, Mpo. Apparently in your lectures you didn't, but in the test, please do close it off. Do close it off. No, but wait. If we close it off, we're gonna have to debit cost of sales. And no, you're gonna have to debit proceeds of account and then credit cost of sales to indicate that cost of sales is decreasing. Yes, that is what you need to do to close it off. Yes, we credit cost of sales. Yes, Mpo. Sorry. That's what we're going to do, Mpo. Yes. So in the test, that's what I would recommend that you do, because otherwise you'd be confused why we are minusing cost of sales of the 57,000 what. So we do need to close it off, Mpo. All right. Thumbs up, Mpo. Mpo, thumbs up. No, thumbs down. Mpo, are we on the same page? Okay. So now, before we leave, guys, I wanted to just ask individually if we are all on the same page, right? So Aisha, do you understand the work that which we've covered today, ma'am? Is all well? Boitumelo, are you good? Mtetwa, are you well? Give me a thumbs up. Okay. Gugu, are you well? Justin, Kanyisile, Matome, Mpo, Miss Mlalo. Mlalo's vendor, ne? It has to be. What I mean. You are well. I hope I got that right. I hope. Who else is here? Ndivo, are you well? Nobuche? Mpemeti, you fine? Miss Pillay? Swisiso? Sinotando? Sisanda? Tibelelo? Tamsandra. Ish. That's the big one for the day. Tamsandra. Yes. And then Togozani. Siyathokoza ngisho. Right? We are all fine? Good. So with that being said, guys, that is the end of our lesson today. And I will see you guys tomorrow. Contact lesson at APK, and I will announce the venue. Thank you so much, guys, for gracing me with your presence. And I hope that you guys sleep well, rest, don't do anything I wouldn't do. And tomorrow, we are doing again inventories, going over the slides to make sure that we understand what's going on, and then perhaps maybe we can do another tutorial question. All right, guys, thank you so much. Please stay safe, have fun, and bye bye.